Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The bearish sentiment strengthened Friday, sending the Australian dollar to contest the lows around the 60-day simple moving average, or the SMA, which is seen at 66.6080. At present, the bulls have defended this level, but still the market is remaining somewhat to risk of a further slide, and a clear break of 66.6080 level would give the next objective to 65.4050 and reassess from there. Wrapping up his two-day testimony, US Federal Reserve Chairman Jerome Powell continued to keep to his hawkish script after reiterating to lawmakers on Capitol Hill that further rate increases were a pretty good guess of where the US Central Bank was heading if the economy continued in its current direction. With the current US Federal Reserve interest rate around 5 to 5.25 as of June 14th, the Fed's dot plot indicates that the benchmark rate could peak around 5.5 to 5.75%. This week, all eyes will be back on US Federal Reserve Jerome Powell, and along with that, we've got the US GDP. So as I mentioned, the key level at the 60-day moving average, a break beneath there would give scope towards 65.5 cents, and with any advancement likely to find resistance in the short term at 67.15. Looking at the euro, the market is still maintaining a somewhat bearish case after whipsawing on Friday, closed at 109. But the technicals still remaining somewhat negative, could see further pressure to the downside, and a break of 108.80 would give further scope down to 107.70 and reassess. The dollar yen still maintaining the bullish case, and the call still holding at 145, even though there has been a bit of a whipsaw price action today. I would not rule out that the topside target may eventually clear 144 and head on to 145 and reassess from there, with the trend you can see holding around 141.35 and with the immediate support seen at 142.85. After a whipsaw price action late last week, sterling is looking for a direction, but with the technicals still holding negative, may find a bit of pressure on the downside and look towards 127.15 to 127.65, with any upside attempt to be limited. Along with that, with gold finding a base around 1,912, the market is still holding to a negative bias. With the call to the downside reached since the break of 1,928 and 1,912 holding, we may see a little bit of profit taking come back in from the short side, but up towards the region of 1,928.32 could restore the bearish case, and a break of 1,912 exposes the region of a broader target of 1,850. Pretty whipsawed on the oil as well, post the Dragonfly Doji, which may still try and see an attempt to restore its bullish bias. But I feel that the lackluster or the weakness to the current technicals remaining negative may actually see another down test this week, and therefore look towards the region of around 66.5 and the base holding, the key base that is, at $65 a barrel. Well, that's a wrap for the start of this week. Thank you very much for joining me, and as always, look after the intraday report, and I hope you enjoy the rest of the day.